Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. All right, well, we are here on time. We got a big CPI number to come out here, and we're going to see the aftermath of the hurricane. So let's go to the charts and see how we're doing here. So the treasuries, you know, they were pretty tight during our session for the most part. But as the session went on, they just continued to fall, and now they are falling in the overnight action as well. So we're kind of back to this spot where we have to come back and look at a daily chart, and you can see that they are just off of that 200-day moving average down below us at 111.28. So if we get a bad CPI report, like, you drop through a 200-day moving average like that, that's going to cause some chaos. So we could have some wildness today if we get a bad CPI. I kind of think that it's just going to be in line. S&P 500 doing pretty okay yesterday, but it's just a tiny little extension. And here again, we go to a daily chart where, you know, we're right at all-time highs. So, like, cool. All right. Oil seeing a little bit of volatility. You know, it still sounds like Israel is going to retaliate in some manner, and we don't really know what it's going to be. And I think that the oil market's going to be on edge until that happens. We got gold and silver. They took a little bit of a dip yesterday, and they're just kind of trading around in that range now. Copper, well, there was some indication from China that they're still trying to stimulate the economy and whatnot, but doesn't look like copper's really responding to that. So I guess things are still a little bit tense in China. Japanese yen continues to trend down, and I'm wondering how far that can go before they, you know, that starts to become a problem again. And Bitcoin down. I have lots of thoughts about Bitcoin right now because I watched that documentary on HBO. But, I mean, look at the price movement is still just kind of like, okay, whatever. It's not really doing anything all that interesting at the moment. Really hasn't done a whole lot of anything interesting since the whole ETF thing. It was like there was enough people looking to cash out on the ETF rise to kind of cancel out any kind of rise that it would have afterwards, and now is just kind of done nothing like the whole rest of the year, it seems. All right, so good morning, Octavius. Glad to see you here. I'm guessing that Uzi is without power. Knowledge Geek, welcome. So we're gonna have CPI here in 3 minutes. I really want to like take a trade and make a bet on CPI, but I don't think that I really have a strong edge on this one. My guess is that the CPI is going to come in line with the estimates. So they're looking for core CPI month over month to come in at spot 2, with the previous reading being spot 3. If we got a spot 3 again, I think that the market would be very upset. But I think that we're going to be spot 2 this time. Now, if we're spot 2, I think you will see a market reaction. I'm not entirely sure what that reaction will be. I kind of think that it will be a long, but I don't know if it will be like a big long or a small one. And then again, on the downside, if we do get a bad report, we've got a 200-day moving average down here. Well, let's say it's at 29 because there's a big order there. But so that's going to be awfully messy if we're testing those prices. So we got about a minute or so. So let's just kind of rest. You gonna risk $300 on CPI? Go, yeah. Always makes me nervous when people tell me things like that, man. Because like, what if you get slippage? Like this is the sort of news that can destroy accounts, right? Just be aware. I'm not saying you don't know what you're doing or anything. Just make sure you're aware of the risks, right? Oh, I have my speakers on here. Fix that. All right, here we go. Whoa. Whoa. It is higher than forecast. Whoa, wait, what? I'm gonna sell that. That's insane. Dude, this is insane. Okay, so we had the worst case scenario. They went well past that 28, 29 and then bounced way back up and pushed the highs big time too. What's with that? CPI, month over month, spot 2 versus an expected spot 1. Core CPI, spot 3 versus spot 2. How is that a buy in any way, shape, or form? That has got to be some sort of a, just like knee-jerk counter-reaction endogenous move of some sort. And I did somehow got a really good spot on that. And I wish I had been able to get a third contract, but let's just let this simmer. Any thoughts on the YouTube CEO stepping down? Is that a news story? I hadn't heard that. Or because like there was the Susan Wojcicki, but that story was like a month or two ago. And a lot of people thought it was kind of odd, but Neil Mohan is the current CEO. I guess the only other thing that I could say is that I didn't think that she was a very good CEO. Like, I did not like YouTube as much under her tenure. I think that YouTube is the best social network in that respect, that like they do care about their creators and stuff. But, some of the things that they do with censorship and the way that your channel can just be completely at their mercy really rub me the wrong way. Okay, so there's a slightly new high there, and it's just kind of like a little bit slow. This is a little weird, man. You're running on... Yeah, so Knowledge Geek, what was your position? Oh, it was copper. It was copper. You had a position in copper. Well, risking it in copper is not such a bad thing, right? For right now, they're up a little bit. 4.3990 in copper. I really think that they ran into that 200-day moving average and bounced. I'm a little concerned here, man. How much did Black? Well, I don't know. It's probably just splitting the difference for them because all sorts of assets moved all over the place. Okay, so I'm getting some stacking on the offers now around 10. You see that big monster 5K order at 10? Well, it does seem like the bulls are struggling in this area, but I would have expected things to have just flipped around by now. So I'm actually a little surprised that we're still at this spot. Awesome. Awesome. So if I'm really nervous about it, I could take the second contract off there as well, and then that would really give me a lot of breathing room. But I'm kind of thinking that they're going to come back across the open here, so let's just kind of give it a little bit of time. I am seeing flows shift now, like the 2-year in particular is selling right now, as is the 30-year. Hasn't quite come in the 10-year, but it looks like they're kind of starting to come along. Bids are melting a little bit. Although I don't know if I can give too much credence to that because it's a pretty slippery market overall. Okay, so there was an iceberg at 04.5. That's probably significant. Oh, and there's some of those offers moved down. So normally stacking like that is really suspicious to me, right? It's like, why would they be putting that there, etc., etc., etc. But in this case, early in the session, after some big news and everything else like that, I kind of see those big orders as supportive of our short trade. Okay, so there is maybe a little bit of supply at the open, though. as I'm watching this, I'm thinking about the economy, the broader economy as a whole, because in my view, the job market is a little ugly right now. Like, of course, we're getting a lot of pretty good jobs numbers and so forth, but when you kind of do some digging, most of those new jobs are coming from government, except like they're not coming from private companies. It really seems to me like, especially you get into like my kind of area, like technology people and maybe upper middle income earners. The job market is incredibly tight. I'm getting like oh my gosh, like the response rate from putting resumes out is terrible. I mean, I've gotten responses, but not very many. Maybe I need to take a look at how optimized my resume is, see if I can improve it. But I'm told that you're only likely to get like a 1 to 4% response rate right now anyways. Like, it's just crazy. And so in order to kind of ease that labor market, we need lower interest rates. But when you're getting in, when there's the concerns about inflation, I think that you are going to reduce interest rates, but just maybe more slowly than the market anticipates. So that doesn't help. And it doesn't help me. It doesn't help me at all. I need to be careful to not let myself get like really down and discouraged, because I had 2 things going on that I was hopeful about, and I didn't hear anything yesterday. And that's not like necessarily like, the end of it, but I kind of do think they would have gotten back to me the next day. So like, I think I'm back to square one, and that's really discouraging. And if I think about it too hard, it's going to make me depressed. Okay, so we came back to like the cost basis line, and there was a little bit of a bump in the profile there, and you can see actually a lot traded there in that area. A lot traded there in that area. And now we're bouncing a little bit. So let's see where this goes. It could be if they decide to split the difference and find an area in here that they balance at. But I'm kind of thinking at the moment that this is like, it's going to bounce a little bit and then maybe it falls lower, but we'll see. But I was able to take the second contract off at a pretty good spot, so like, look at that. Yeah, I can probably just kind of relax and let this do its thing now. So probably part of what's going to be a dominant factor from here is going to be this dollar, right? The dollar took a huge dip and then came back up. That's really interesting. Like, I just can't imagine why the dollar would sell on that. I do think that the 200-day moving average in the treasuries is probably a factor, but I think it's got to be more than that. I think it's got to be like somebody doubling down on a bet. They think that the Federal Reserve is going to reduce interest rates, that they have to, and that they're not going to care what the inflation numbers are. Look at the 6E chart, break even, and let it do whatever. Yeah. Well. Messy move, too. Okay, so that's a little bit more like the bounce that I was kind of suspecting. Actually, I'm actually seeing, well, that's really interesting. Like the 5 years sold, the 2 years sold, the 30 years sold and then bounced. But the 10-year overall didn't really ever sell. Like, it came down with the other ones, but the cumulative delta is not sell over here. Cumulative delta is kind of, it was a little bit down and then, zoop, so it's up. They're buying the 10-year. That's interesting. Oh, well, yeah, by the way, that reminds me, we should come over here and start the stage. Well, I'm a little less confident in the sort of like hold this forever sort of a trade. So I don't think I'm going to add in this spot this time. I got one contract. I can just, let that one ride. They are back at that price though, where I got my initial fill. Well, I there was maybe a slight change in the flow right there, but that's probably too small to really care about too much. This has been the most interesting post-news move of all year, I think. Okay, there's actually a big iceberg there at 09.5. That's interesting. I wonder if, you know, you're in the treasuries and you come to the 200-day moving average and you're selling below it. If, you know, how good of a, you know, just buy it on mean reversion hopes is how good of a trade that is historically. Because those daily moving averages do matter for, like, all these momentum funds and everything use those. So, like, flows could be driven by that. But I don't know if it'd be as simple. I kind of thought if they breached it, there'd be some chaos and maybe some continuation. Like, it could turn into a really strong trend, but that's not what happened. In fact, are they going to bust the highs here? I don't think that they busted the highs, but they touched them. Department of Justice indicates it's considering a Google breakup following a monopoly ruling. Now, when I saw that headline like a day or two ago, I kind of thought that's just like speculation and whatnot, but it really is kind of starting to sound like that's what they want to do. And I'm just kind of still sitting here like, how exactly are they going to break it up? Like, I just can't imagine. From r/trading, what is this snake oil of trading that actually works? Oh boy. Everybody in the comments just complaining about the title. Okay. Well, they're coming off now. Let's see if they turn back to kind of the cost basis area again. I don't know. At the moment, it's kind of hard for me to think about anything else other than this really bizarre CPI news. You know, the problem is I don't have Uzi to distract me with political stuff. He probably is doesn't have power right now. The whole central area of Florida is. I'm actually surprised that Octavius has power, but I guess he's further south, huh? Okay, so something I've noticed, by the way, about this whole hurricane thing, because I've kind of been like, you know, I'm like more keyed into this hurricane than any other hurricane ever. And like, what's with that? Well, it's not, I mean, it's a large hurricane, but it's not the largest hurricane of my life. Like there have been, even relatively recently, larger hurricanes, actually. But like when I get on Reddit, there's all these people saying all these things. It's like, oh, this is finally going to be the thing that convinces everybody that climate change is real. And one of the threads I saw on the worst. This to me is, I think, like one of the worst subreddits on Reddit is r/markmywords, because almost every thread there is just absolutely insane, stupid predictions from people that have no clue what they're talking about. And there was multiple threads over there basically saying like, Ron DeSantis is screwing himself over and Florida is going to flip Democrat because of the hurricanes and everything. And that, I think, is why they're so interested and almost excited about their hurricane. But then when I actually look at, you know, people from Florida, to them it's like, you know, this is just all par for the course. Of course, there's going to be a huge storm surge. It's going to hurt a lot of people's livelihood. It's going to do a lot of damage and everything, but we're used to that. That's what happens when you live in Florida. Okay. Let's see. It was a category 3 when it hit land. Will the damage be better or worse than expected? You know, because apparently the aftermath is kind of bigger than the initial storm hit. So we did back off of the highs, but now the market seems to have possibly settled in a liquidity hole. I find it so weird that it's doing it like exactly where I took my first trade. Like, what? What are the chances? I don't know, man. This is from r/PC Master Race. Potential 5090, 5080, 5070 price leaks. This is from NVIDIA. NVIDIA just briefed us with new RTX 5000 info. Supposedly, they are indeed planning to launch in 2025 now, and they're also warning us that they're considering the following prices: $2,000 to $2,500 for the RTX 5090, $1,000 to $1,500 for the 5080, and $600 to $700 for the 5070. Well, for the 5070, that actually sounds like what they've been. Also, one slide compared the 5070 to the 4070 Ti in raster, but with slightly better ray tracing. Oh, and I must stress that their plans have changed multiple times this year, and it would not be a surprise to me if they change things again, or if this is just them gauging reactions to these price points. But as of today, this is what they are telling partners, and we think it's bad. Yeah, I don't think that people are going to spend $2,500 for the newest video cards, especially since, like, I feel like the current generation of video cards run everything on the market really well, and like they haven't really been pushing the power of graphics. Well, I tell you what, man, that they would just here in the last minute, there was a pretty quick fall. I'm not actually really seeing the delta behind it yet in the treasuries. I am hearing headlines from China, but I don't know if that's related. Oh, wow. You should stop browsing Reddit. Watch this one, man. There's a guy, he's doing one of those things where he's like skateboarding down the side of a mountain, right? Goes off onto the side, hits and then wow. Like that's, well, okay, to his knees. But man, that's a pothole. There's a deep, deep, deep little pool there on the side that he couldn't see. That's so crazy. How was the hurricane? It's a hurricane, Knowledge Geek. But so far, it sounds like that things went roughly as expected. It hit landfall as a category 3. It pushed through the state much quicker than anticipated and is now a category 1 and kind of moving out to sea now. So the worst of it is over. It's too early in the morning to really know. We haven't really gotten reports yet, right? What's going to happen is in the next few hours, people will be surveying the damage and everything, and we'll see how bad it really is. Okay, that's so interesting. So that drop there was really quick, and I didn't feel like it really had delta behind it. Might have been... It looks like it was coming from the dollar, and the dollar reverted back down. Don't see that spike in the 6J, or really anything else for that matter. Well, I tell you what, if Knowledge Geek, you're doing pretty good on that copper one. Those comments that I was hearing from China probably are helping copper right now, right? I don't know how big of a move that is, but copper is looking like the most trendy thing at the moment. Now on the split side, just the chart in the treasury kind of looks a little bullish to me. Not that that's really very reliable or indicative of anything, but like you can see there's like not, this decline was just that little change in cumulative delta. Like that's kind of meh. I'm kind of thinking that the scenario where the treasuries come back down to here or push below it and start pushing that 200-day moving average again seems a lot less likely than it did like 30 minutes ago. Everything is trending now? Oh, maybe. I mean, one could read this in the treasuries as an uptrend. You look at, the lows and everything. Right? And oil is doing okay too. But not the S&P 500. So that's maybe part of the interesting thing. Well, so you can see here in this chart, Man, sometimes I don't think that you can actually see what I'm saying. Let me put the circle around it. No, that's not gonna work. Over here, you can see that the S&P 500 is down, right? But then another thing that's interesting is, what's the spread doing? The spread is steepening. Why is the spread steepening? You know what, by the way, I think I should switch these. This one, I want to be there. So steepening tends to be like, or as of late, tends to be like when things are going well and we think that they're going to reduce interest rates, but that the economy is still really strong, we flatten. And when they start to be concerned like, oh no, we might have a recession, we were steepening. And now here today, we're both steepening, even though the S&P 500 is down. So the S&P 500 would be down like, okay, why are they down? Probably because they're like, oh, they're not going to cut interest rates as quickly as we thought. But then that's not what the treasuries are saying right now. Of course, markets aren't efficient, so it's, you know, can't say that that's not true. Just that maybe the flows on people taking a counter trade on the reach of the 200-day moving average may just be stronger in this instance than the people trading on the CPI, which to me is a little bit wild, but that's what we got going. So you know what? I should probably come in here and take some notes, huh? Let's come in here and take some notes. Dude, I yesterday, in the morning I did some, oh, actually, I have a couple of things. I forgot all of the stuff that I did yesterday. But I wrote a script. Where is it? This one? Oh my gosh. I don't know. Is that too many words? I don't know. That might be too long of a script. This might turn into another one of those videos where it's like I was planning on doing one thing and like it turns into 4 videos or something like that, right? You know, order flow myths. I may just do that. Does order flow matter? Make that a video. Yada, 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 yada. Maybe include a little bit of this thing. Then I could make a video specifically about dark pools, because this part about arbitrage is probably not as interesting to people. Anyways, in the morning, I'll open up this one. In the morning, I was doing a little bit of research about the prop firms, because like, man, you know, when I started doing this, there was just Top Step. And then Earn to Trade had come along and was a new thing and was kind of viewed as a little bit sketch. And then Apex and all of these other ones came along. And my gosh, there are so many of them now. There's so many of them now. So I went through and I looked at their policies and everything to see who had live trading and who did not. And there was only 3. There was only 3 that had no live account whatsoever. And by the way, these ones were like, oh my gosh, like they so totally tried to hide it. They so totally tried to hide it. Like these first 2 in particular, like they only say that these are all sim accounts in like their terms of service or the disclaimers at the bottom. And it's like not anywhere in any of their facts or anything like that. Right? Most of them though say like, okay, when you get funded, it's a funded sim account, but we'll pay you out on the funded sim account. And if you do well enough, we'll eventually move you over to a sim account. But there's no kind of like clear rules about when that happens. And I kind of suspect that that only happens when somebody is doing so well that like they just can't afford to be paying them out of their profits anymore. Okay. And then there's a lot of them. Well, not a lot. These three have clear rules about when you go to live. Like this one, Take Profit Trader, you upgrade to Pro Plus after you've made 5K in target. Or there's a target you have to hit. Or Top Step. This is the Top Step form of it, right? Is, once you've reached, in Top Step, it's basically like a second combine. And once you've reached a certain amount of profit on that combine, then you get moved over to a pro count. But then you also still get paid out. Like my understanding is that Top Step does pay out on that second step, which I didn't think was the case before. But when I was reading through and was a little vague, it seemed to me that you could get paid out before you had a live account. Okay. Then there's these two that are like, you only get a payout after you have a live account. And they're like usually actually this is not. One is a two-step process and one is a one-step. So interestingly enough, this one right here, which is the newest one I could find. I didn't see a lot of people talking about this one, Next Gen Futures Trader. But I found it. This is the only one that actually works the way that I think people think or expect a combine to work. You take the evaluation, and then once you pass the evaluation, you are given a live account, and you can get payouts on your live account. It's the only one that actually works that way. Isn't that crazy? Isn't that crazy? Right? And then there's also some ones that are like, you can go to live immediately after passing. So Trade Day and Earn to Trade have ways of doing that, but they also do offer sim payouts as well. So it's like you can choose to go live or choose to continue doing the sim payout. Isn't that interesting? That there's enough people that prefer to stay on sim, that there are some funds that don't force you to move over to live. Whew. Just one other note, one that was unique here was fast track trading, because fast track trading, there is no evaluation phase. It's just if you go in and you start making money, you can get payouts straight up, which is kind of interesting too. But my big takeaway from all of this, because there's a lot of nuance between all of the rules, but pretty much all of them are offering payouts on sim orders. Pretty much all of them. And it is likely that the vast majority of payouts, the profits are coming from the profits of the firm from people failing the evaluations. Probably 95% of it. And there's only a very, very, very small percentage of people that are actually making profits from live trading through the prop firms. So do you think, well, I can't say that any of them are legit. Like I didn't go through and read the reviews and see what people thought of them, right? One of the things that's going on right now is that a lot of people are complaining about Apex trading, saying that Apex trading, you'll pass all of the qualifications to be a funded trader or to get a payout, but then they will deny your payouts. They'll say you broke some rules, or there's some other additional vague rules on top that they can deny you for. What was special about fast track trading is that there's no evaluation phase. They claim there's no, here, let me pull it up. I'm not promoting this, okay? I'm like making this video. I did all this research to make a video trashing prop firms, okay? So I'm not promoting any of these. That's fasttracktrading.net. No evaluations or monthly fees. Instant funding. No waiting period. So you come in. Now it's more expensive. It's more expensive. But you come in and you pay $500 for a 50K account. And then, let's see here. Is there a fact say something about, where? No, that's not how it works. Doesn't really say like when can you take payouts. Oh wait, payouts and withdrawals. Here we go. When an account is, they come with a 5% buffer zone. The buffer is intended to prevent traders from being stopped out immediately and give them time to establish a strategy and create value. In other words, the account is opened. We allow a 5% max loss before the account is disabled. Once you've earned 5% of your balance, you become eligible for payouts and can withdraw. Okay, so like, if it's a 50K account, oh, our max loss per account is 23,750. Oh, that must be like the value of the account. So it's 3,000. So it's actually technically still in evaluation. It's just that it's like not a different account when you switch over. Okay. Kind of weird, but whatever. This one seems to be different. Seems to be structured very differently from the others still, because like look at that. Like normally it's $150 for a 50K account, right? And they're like $500, so that's kind of weird. But it is maybe a little bit deceptive too, right? Let me see here. I'm gonna come back over to where we were reading. How do you handle know your customer? What is your payout policy? They can receive a payout in as little as 5 days. And you'll be allowed to withdraw $2,000 per account. Then phase 2, standard bi-weekly payout. I don't know. Not worth it at all. I don't know if it's worth it at all. But honestly, I don't think that any of them are worth it, man. Like, it's just like... So one of the things that I was saying before is like, how is this not a bucket shop? Like, when you're trading against the firm and not the market, isn't that called a bucket shop? Well, I think that's not the case. I think that's not the case. So bucket shop is like bucketing orders is basically like saying, oh, you're trading in the market, but then actually you're not. I'm just holding with them all here, right? And one of the problems with the bucket shop was like if you lost on a trade, you know, they would just continue to lose. And so it was like you would start an account there. You would put like, you know, $1,000 in on the account and whatever, and you could lose that whole $1,000 if your trading was bad enough, right? And it was, you know, the same risk as trading the market, except for that you weren't actually trading the market because that was too expensive. Like the fees and everything like that were too expensive, and that's why they had the bucket shops, right? But a funded trader program, the most that you can ever lose is the evaluation fee. I guess the evaluation fee, and then most of them have an activation fee as well. Okay, but that's the most that you can ever lose, and so that's the thing that I think would differentiate it from a bucket shop. But the criticism that I still have is that, you know, they call these things funded trader evaluations. They are not funded. Most of these people are not funded because they're just trading a sim account. They don't trust you even after passing the evaluation and all this sort of stuff to put you on a live account. So by and large, they're not funding people, and by and large, they're not trading, which is to say, these aren't live accounts. Most, you know, and so there's all these people out there talking about how they've made so much money from these combines. I call them combines because that's, you know, That was what Top Step Trader is, and so that's the phrase that I use. It's not live trading. Most of the money that people are claiming to make from these combines are coming from getting payouts on profits that they made in sim accounts. I think they make you trailing drawdown and even pay the challenge fees. And you have to pay activation. There's a new challenge to make the and like again, the thing that so in my research, part of what I did was I watched a bunch of other YouTube videos about it. I was a little bit surprised because all of the videos that I watched were pretty good performing, at least 50,000 views. And a lot of these channels had hundreds of thousands of subscribers, which was really, really surprising to me. And none of these videos made this one point that I'm going to make, which is that the profit targets are so aggressive that you really can't pass them with a long-term profitable strategy. You have to be doing something super aggressive and kind of degenerate in order to pass it in a reasonable time frame. And that means that you will always have a strategy that is liable to blow up at some point. Yeah, it looks like every company is rooting against the trader to lose. They are not rooting for any trader to succeed. Yeah. I mean, because again, the issue is, so part of this comes down to my standard is different, right? Everybody out there that, they make money that week or that month and they're like, hey, everybody, I just became a profitable trader now. And I'm like, no, the industry standard is 5 years. And until you've been profitable for 5 years, could just be a fluke. Because the markets are fat-tailed, and that's how much data you need to see the tails, right? So my standard is different. If the funded trader programs actually cared about the traders and cared about long-term profitability on the time frame that I'm talking about, they would be encouraging people to trade much smaller size. The combines would be like 100K account, and we only want you to make 20% a year. Actually, if you game that out, how many trades? How much of a trade would you want to make? So let's say that 50% of your trades are going to be bad. Like you're going to get a 50% win rate. So it's going to be 0.5 the number of trades times some unknown size minus 0.5 the number of trades times 1 minus, or no, times the loser size. Let's just call it loser size equals, $20,000, something like that, right? I passed one last year making 100% of the drawdown that they were asking, and the risk manager told me, you're a risky risker, we can't pass you to live and move one. Yeah. Like, I'm going to bet for these ones right here that the number of people that actually end up going to live is like a handful. That they do everything that they can to avoid putting people on a live account until you have somebody that's making so much month over month that they can't pay it out of their profits and it's a problem, and then they move you over to live. My guess. Okay, so I'm gonna approach this from a different direction. If you're trying to make 20,000, right? $20,000 a year, and you're making you have like 250 trading days a year. That means that you need to average $80 profit a day, average, after, you know, like all of the things and everything. That wouldn't be too hard, especially with a $100,000 account. Okay. So like if you came in here into the micro treasuries and just tried to make 6 ticks a day, if you were just able to make on average 6 ticks a day in the treasury, or maybe even less than that on multiple contracts, like maybe you trade 3 contracts and you only make two ticks, right? And you do that all year, and you're like an amazing performing hedge fund. Like, okay, that's the sort of performance. And how likely do you think that is? How doable do you think that is compared to these ones where it's like you're literally doubling the account size? Literally trying to double the account size in a month. It's crazy. People are blind because of yeah. And that's the thing, is that I don't see in the people saying in these videos is, you know, because they're all just focused on, well, you can make money and you can get some payouts and everything. But the problem is the strategies that you are going to be forced into from doing the combines are not long-term profitable. So I really, you know, it's like, yeah, you might make $1,000 here and there in the short term, but, you know, this kind of idea that like you build up an account and eventually you have $1 million accounts and you're doing bigger and bigger types of trades and you're doing swing trades and you know, like the real money, you can't get that from the combines. You can't. In fact, the combines are actively preventing you from doing that because you're never going to learn the strategies and the things that you need to learn to be able to do something like that, right? You know, why isn't there a hedge fund or a commodities trading pool associated with one of these things? Well, maybe some of them are structured like that, but, you know, it's just kind of private investors on the back end, so you don't really know how. Anyways, so I'm not 100% sure where I want to take this video, but I really want to make this video be like, guys, it's for suckers. It's for suckers. Anyways, I was doing this yesterday. This misconceptions video, it's pretty big, right? That was like all afternoon. That was like 4 hours. And then I got done and I was like, oh, it's 4 o'clock. I've been doing this for like 3 hours or something. I've been writing this for 3 hours. It was a long video. It's a long video. I think I'm going to change it and just have it be this part or right up here, because that itself is pretty long. Don't even remember what got me started on all of this. What comes after this one? And you need a good editor. People's brains can't focus on a long video. Yeah. It's true. It's true. Well, the ZB is turning down here all around the open of the ES. I was just trying to remember like what got me on this to start with. I guess it was just that I was like, I've got tons of videos coming. So I got the one about index funds, and then order flow misconceptions, funded trader programs are for suckers. What is the biggest trader mistakes one? Maybe you could make that one. Although I think and videos, video topics. Video on intuition, I think, goes there. I guess the biggest trader mistakes I think I could put in there. Because some of these, like the one that I'm working, let's put the one at the top here, the are index funds evil? You know, I don't really think that this one is really like the you know, really catch people's attention sort of a thing. It's going to be a pretty information dense, boring video. Like, data is greater than intuition? I don't think so. So I think that you want to build your intuition on good data. But in our worlds, in order for a human to really compete against robots, you're going to have good intuition. That's the thing that we can do that the robots can't do. So that's why building intuition is such an important concept for traders. That's why I want to make that video. It's to explain to people, well, so here are the things that are going to help and hurt you as you're trying to develop that intuition. One of the things that's going to hurt you is looking at so many things that you don't really know if they're useful or not. Because your brain can't focus, it's not going to build those connections, because building intuition is actually building pathways in your brain. So you need to have like an intentional process behind it. I think today, on this trade today, because that was all pretty quick. You know, it pushed down. I knew my stuff today. You know, a lot of the times recently I've kind of screwed up and wasn't really prepared. But today I was prepared. I knew what the scenarios were, and I knew like where the technical levels were. So when it initially sold and then bounced so hard and came up here, I knew why. And then I was able to use my intuition to pick a really, really good spot. That was 100% an intuition trade. It was just, it came back up and I was like, well, I'm going to sell that one. It's working out okay. Let's see how far down they go. That's intuition. That's why it matters. In fact, it was so good. How much was this? $30. That's not that big. If I had taken it on my live account, it wouldn't have been that big. It depends on your definition of intuition. So this was something that I thought was kind of weird, because I kind of thought, oh, intuition can mean like a bunch of different things, can't it? But from my research, I think that intuition is something that's actually pretty clearly defined, and we just don't really think about. So what is intuition? Well, intuition is being able to make decisions and understand things without having to use conscious logic. That's intuition. So like when you walk, do you do all of the calculations in your head about how much you need to move your foot based on what the type of ground is and where your leg is right now and all of these sorts of things. No, you don't think about that. You just walk. You don't even consciously think about it. We walk using intuition. That's intuition. Our brains, part of what our brains do is it's this neural network where you just kind of pass in the inputs that you've got right now, and you have a goal. The brain has a goal, and the brain cells align themselves until they get out the goal that they want. And then when they've done that, the brain cells solidify those connections and remember those connections. And that's the way that a neural network works, essentially, and that's what our brains do. That's why, for instance, when they've been trying to get robots that walk and do all of these sorts of things, they used machine learning to do it. Because it's just easier to do that than to try and do all of the complicated calculations. You use intuition. Anytime that you're doing something and you just know the answer, that's intuition. So once we understand what intuition is, being able to understand things and make decisions without using conscious logic, then the question is, okay, what causes intuition? How does that work? Well, so I already kind of gave that one away, that it's because our brains are neural networks. So how do you train the neural network? Well, now you can look at things that we've learned from machine learning and kind of apply them to yourselves and find ways to better develop that intuition. So one of the things that matters is the data that you're actually training on. Garbage in, garbage out. So you don't want to just be watching every indicator that you can to see if maybe there's something to it, or like which indicator is working that day, sort of a thing. No, you want to look at things that you know matter. Something that we know matters is breaking news, economic releases, etc. So you want to have a news squawk. You want to have Twitter open and be watching those things so that you can include those things into that intuition that you're building. And don't put things up that you don't have a lot of evidence for. Of course, you're going to have to be finding new things. So you should be testing stuff and everything else like that. But you would prefer to primarily do that through quantitative means and spend your active trading time looking at the things that you know matter. Another thing that we know from all of this is that the order of things matter. That there are certain things, lessons that you might learn that weight so strongly in the neural network that it will prevent you from making other connections. So it's a bad thing to come into trading, immediately go into a combine, and then swing big and pass the combine and make money. Because now there's all of these hard lessons that you didn't learn. The guy that comes in and just trades small for a year, maybe on sim, and really just is, going after the scraping for every little tick and all of that sort of stuff. They're going to learn things that these heavy hitter guys don't. And that's why the people on our stream that come here and visit every day, that's why you guys have survived for so long, whereas most other people, like they'll say that they're a profitable trader and like they'll get some payouts and everything, but then before 2 years is up, they're out of the industry. They don't last, right? So those are some of the things that we talk about in that video. Anyways, but it does kind of, but your point though. Like, you need a good editor because people's brains can't focus on a long video, etc., etc., etc. Like, I think that you have a good point. It's like, I can come in, I can make a talking head video, and those of you that are interested in that subject and want that information will watch that video. And those videos can be useful, especially when they're on things that people are interested in, right? But doesn't really move the needle. Like, in order for me to get my YouTube channel to like 100,000 subscribers, order for me to, you know, like, I need to, I'm between jobs. I'm having a hard time finding a job. This market is really, really difficult. One alternative option that I have is to start making enough money from the YouTube channel to cover it. I'm gonna need something better to move the needle, because the videos that I got and I'm planning are too boring. How do you inject stuff into that to make it interesting and funny? Especially the ones that are like really detailed esoteric stuff, right? Well, I might be able to make the intuition video a little bit more entertaining like that. So we'll see. We'll see. But it's hard. And I tell you what, man, I'm as I'm going through this process, like I spent, you know, a long time working on the script before, and I'm like, how have I been doing this the past 4 years? Like, how did all of the other videos that I made, how did I make those? In my spare time, because each one of these videos takes a lot. Just writing the script takes a long time. How did I do that? It's crazy. Anyways. And I'm probably going to have to spend a little bit more time today submitting resumes. I think I did 2 or 3, because that was the ones that was like, okay, that's what it looks like we've got available to us. I need to do like 10. I really need to scrape and find 10 somehow, because like the response rate is just not good enough. I guess I also should go and do a little bit of checking it, like optimizing the resume a little bit. Make sure that the robots can read it best, and that the HR people see that I match right away from looking at it. What are you looking work for? I do site reliability engineering. So it's computer programming, essentially. But it's kind of like a computer programmer doing the infrastructure side of things. Regarding your indicator resting orders, as each 1 minute or whatever time frame we're on, does it calculate based on the last tick in that time frame and plot it? Yeah. That is, it's the value that you get is the closing value. Yes. So there could be weird fluctuations on it interbar. You know, like, could you turn them into candles? Yes. But the amount that it changes within 1 bar is not that much. So candles wouldn't really do anything for you. Like, I have candles for the spread indicator, right? But that's primarily because, you know, you might be scalping for ticks, and then it would matter. So, or you want to do it on 30-minute bars, then it would matter too. But the cost basis is a different matter. By the way, interestingly enough, the cost basis hasn't really moved too much today, right? Like, it is about where it is before the news. And we came down to the cost basis at 05 and are bouncing again. The sellers don't seem to be able to push below that, or at least unwilling to. I'm not really seeing a super active, strong selling flow today. Wasn't in candles. I just wanted to know the formula calculation when you programmed it. What do you mean by int? What was in candles? I don't know. The candles thing is weird, because then you have to write all the code for doing the drawing, right? and the calculation for the cost basis is really complicated. So so I'm saying, like, I wouldn't think of it as like a formula. It's like it's a model. It's an agent-based model. It's like I have an agent and he does this, and then I have another agent and he does this, and then I see what their numbers come out to. This move was a hurricane. It was a crazy move, wasn't it, Octavius? This is probably the most interesting move we've had all year. I have not seen anything this wild in the treasuries in a while. And I mean, I really expected, I thought that if we had a bad number, that it would be like, and then here's like the 200-day moving average, and then it would be like, and then, you know, maybe settle down here and go flat, right? So for it to have instead gone, hey, here's the 200-day moving average, here's where we started, what is like really surprising to me. Part of it probably is just, you know, people pushing back on the push of the 200-day moving average and saying, well, it hit that so hard that I think that we buy it here now. But I also kind of think that in order for it to be staying up here, that there has to be, to some degree, people like doubling down on bets that the Federal Reserve is just going to ignore it and continue to reduce interest rates extremely aggressively. I've taken your resting orders and only using the first 3 levels from price seems to be way better. Yeah. Well, you might see different things with it, yeah. And probably the first 3 levels are going to matter more. But that's why like all of those filters are on there, right? Is like, I did not create those indicators from the perspective of, okay, here's this really specific edge that we know of, and I'm going to tailor this indicator to show you exactly that one thing. No, what I did is I said, there is data in there that you can't see, and I'm going to make a way for you to see it. And it's up to you to find out how to use that tool for a strategy, right? And I made it a very flexible tool, so you can see a lot of different things with it. You did a good job. Good ad on the DOM. Thanks. Yeah. I think it's good. I mean, I'm pretty proud of my indicator suite. I should probably like charge more for it, but I think it's a good price. I think I got a good deal. We've gotten a pretty good number of people now that have used that have purchased the indicator suite, and it sounds like everybody is happy with it. Amir says the market destroyed my edge these days. Well, you know, I'm actually like thinking back on this, a little bit surprised that I traded this and did as well as I did. Because if we go back to this chart that I was theorizing on yesterday, where this is risk and this is opportunity, right? And like equal risk to opportunity is above this line. So basically you want more opportunity than the risk that you're taking on in order to take a trade. And the line of the way that the market actually works is something like, at first there's not a whole lot of opportunity for the risk that you're taking on, but then you get relatively active markets, and then it kind of trails off to where, you know, the risk just keeps exponentially increasing, and the opportunity that you're getting isn't increasing accordingly. And so there's these markets that are just incredibly volatile that aren't worth trading. And I kind of think that this move is somewhere in there, you know, just maybe just past the at point where maybe the risk isn't worth it, and where I would be reluctant to take a trade, you know? So it may just be that. Charge as much as you like. I already have mine. One of the things I think is funny is like this whole thing that like you can come in and like increase the price of your thing and it makes it more desirable. I don't think that would necessarily be the case in the cost basis indicator is something that is complex enough and so forth and valuable enough that I think I could potentially sell it for thousands of dollars, like between $1,000 and $3,000. If I had something that said, like, if I had a study that proved this really works and there's a really strong edge in that, right? Or I was willing to do these kind of sketchy things like saying, well, here's this one client that I made, Octavius, he's made so much money from this particular thing, and here's a testimonial and all that sort of stuff. You're not supposed to do that in trading, right? Unless the average customer's results are like that. But if I had the marketing right and everything that I think enough eyes would see it, maybe that would work. But as it stands right now, I think that the draw to it is that it's kind of like it's something that's not super well known, but is still very, very valuable and very reasonable price. And so, anybody that uses NinjaTrader can benefit from downloading the indicators. And I think that that's where it's coming from. And we keep it that way as long as that's the situation. Now, there might be time in the future where I add even more features, and in order to like really keep up with the maintenance that is required for it, I would need to increase the price, or maybe increase the price to provide more of a marketing bucket or marketing budget. But at the moment, I don't see that happening. I think what we're going to do here, let's come back to my my plans here. So I've got some videos. I actually kind of have a little bit of the intuition video written too. I think I have an outline for the biggest trader mistakes. I think that this one right here, how much do you need to day trade, should go up here. So that's like 5 or 6 videos that I could put out. I could potentially be putting out a video every week. And like, frankly, if the job search continues to be as rough as it's been, who knows? Maybe the ones that I was expecting to come back to me yesterday, they'll come back to me today and be like, oh, we want another interview on Monday. Then, by next week, I'm already working, could happen. But another possibility is that we go through all of October and we're not able to find, or on week 3 right now. We're not able to find a job, and then November and December is going to be very difficult to find a job, right? So in that case, I hope to be putting out a video every week. So we would have all 6 of those out, and then we'd even need to be thinking about other videos, right? But then somewhere in there, once I'm ahead enough on the videos, we come back to our to-do. Oh, I did this one. I messaged him. I haven't got anything back from him, but... so here's these scripts. There's some books that I'm reading. And then here's some of this stuff, some of this programming that I want to do. I think Better Zigzag goes down at the bottom of this list because I'm not that interested in that one. That one is like, I don't really think it has a whole lot of value, but people would be able to backtest with it and disprove a lot of things, and other people would find it really useful. The Better Zigzags, so. Yo laughs about that one. I'm also, there's this game, rock, paper, scissors. Okay. Cause another thought that comes in here is maybe I need to start a programming project that is not day trading. some sort of a game or something. So, you know, one idea that I've had, I don't know. You guys tell me what you think about this idea. But one of the things is that my kids seem to just like to take the phone and browse through things. Like, if I put a video on for them, they can't stand not touching it. They have to scroll through the suggested videos, and as soon as they see one that's interesting, they're going to click on that and go through that. And if I put them into a game, they always somehow start browsing, navigating through all of the menus and stuff like that. So my idea is this: a phone application that is just infinite menus. That is just like this never-ending menu. And there can be like levels, like you browse through it and maybe there's one pathway through that gets you to the next level. And when the next level is there, like the color and the look of the interface changes, you know? And it can be like randomly generated, if not like AI generated, to be like, okay, here are the types of menus and stuff like that people are, you know, they play more when they're in these, right? And it is just like an infinite menu. And then you can have like a little ad in it, and kids will just play that forever, I think. So that's my current like non-day trading programming idea. But if you have a better non-trading programming idea that I could potentially make money and spend some time on, let me know. I used to, when I was a kid, I had so many ideas and so many things that I wanted to program, and I never did. Just didn't have the focus. Which reminds me, by the way, did you guys watch the Bitcoin documentary on HBO? So, yesterday, or the day before yesterday, Tuesday, I was only able to watch about half of it because then the hockey game was on and I wanted to watch the hockey game. Which, another hockey game tonight, so we'll watch that tonight. But I watched the rest of it today. Put C# training. Okay. That one would go in a planned video, right? Planned videos. Maybe somewhere out here. C# basics. That could maybe be interesting. Anyways, so the gist of the documentary, I'm going to ruin the documentary for you. So there's one level of it, which is like, I want to watch it, you know, and be surprised and all of these sorts of things. I'm going to ruin it for you for a reason, so that when you're watching it, you can analyze it a little bit better. Okay, because essentially what happens is they're making a claim about who Satoshi is. Okay, so now I'm going to ruin it for you. They think that it is this Todd guy. Sorry, what is his first name? Peter Todd. Yeah, I'll show you a picture. The filmmaker thinks that it's Peter Todd. Okay. So that's the spoiler. Okay. And the reason I'm telling you that is because the documentary basically has zero proof. They have literally zero proof that it is actually Peter Todd. And their case is essentially like the filmmaker looked through all of the evidence, kind of made a couple of observations that other people have missed perhaps, and came up with this theory, and then confronted him with the theory. And so the real evidence for that Peter Todd is Satoshi is how everybody reacts to that accusation, is really what it is. And so that's why I want to tell you, so that when you're watching it, like, watch how all of these people react to the questions about who Satoshi is and everything. And especially at the end when they confront him. And I find their responses awfully suspicious. Awfully suspicious, man. I tell you what, especially this guy right here. Oh, I can't remember his name. But anyways, this was basically the first guy to be contacted by Satoshi. Like, he made a sort of a pseudo cash sort of a thing that was before Bitcoin. And Satoshi just kind of like solved one of the major problems with it. Okay. So he wanted, when Satoshi made his white paper, he wanted to cite this guy and he contacted him. Okay. Whenever they ask about if that he's Satoshi, because some people say, well, he was just, he is Satoshi and he's just kind of playing it. And he is like very, very adamant and specific that like, you know, like I know that everybody says that everybody is Satoshi and everybody gets accusations and everything. But like for me in particular, I am definitely not Satoshi. And he's very adamant. And like the way that he reacts to it is very like, he is like very concerned about it. Maybe partly because he doesn't want to be harassed about it and everything. But then, like, when you get to this final scene, this guy, he actually gets kind of mad about it. But he's playing around with it. Like, everybody else is like, well, maybe it's this and maybe it's this. And they're, like, super hyper speculative about it. As though they don't really care. And they're just listing out all of the different crazy possibilities that they've seen people say online, but that they don't really have an opinion or care. And except for Peter Todd. Peter Todd is the only one that's really willing to like play with it, to like joke about, oh yeah, I because I am Satoshi, I totally am, and I've thought of everything, and you know, like saying that, you know, he's Satoshi because surely Satoshi wouldn't out himself, right? So it's a joke. But like he talks about the game theory of it and everything. Like he messes with it in a way that the other people don't. It's like the other people, it's like they have a secret and they're terrified to reveal it, except for Peter. And so in this scene, you got this guy in the back and he's just kind of watching what's happening and just kind of like, you know, leave me out of it. And I'm, you know, like what I think is happening is he knows, he's always known that Peter Todd is Satoshi, and he doesn't want to reveal it. He doesn't want to be the one that screwed up and revealed who Satoshi is. If somebody's going to screw up and reveal who Satoshi is, it should be Satoshi revealing himself through his own hubris, essentially, right? And so he just is kind of like, I want nothing to do with it. And I tell you what, man, their reactions, of course, the filmmaker, he has the advantage of editing and all of that sort of stuff and setting a narrative. But when I was watching it, they looked so guilty. He looks so guilty to me that Peter Todd is it. And you know what? Like, they have zero evidence. He has a theory about why it's him and how he came to that conclusion and everything. That's interesting. I don't think that it's any better or more compelling than any of the other theories out there, but it seems to fit. But then there's all of these other things about it that like really, really fit. And that's what kind of got me thinking about this particular thing, was that Peter Todd was 16 years old when the Satoshi white paper was released. So this guy is basically claiming that Satoshi was a kid, that Bitcoin was invented by a kid, and that he created that pseudonym not necessarily to be anonymous and all of that sort of a stuff, but because he was a kid and nobody would take him seriously. So he had to make the mysterious guy up to give it credibility. And that really, really fits to me. Like, I can remember when I was a kid, when I was doing some programming, I was able to do some pretty amazing things as a kid, but I just never put the effort into the right thing. You know, so could I have written that? Well, I would never have written that because I didn't know enough about the subject. But like, if I had the right inclination and everything and the right focus, then maybe I might have done it. And, I wasted a lot of time. But there's this whole thing that they're like, he wrote this change to like what Peter Todd's contribution was, is that he wrote a change that basically allowed people to submit a different fee to get prioritized in the blockchain and more likely that they would be included in the next block, sort of a thing, right? He wrote that. Just kind of like out of nowhere. And they were like, why don't you write some code for once? It kind of seems to me like the kid, he did write it one time and then he was lazy after that. And he didn't really write a whole lot until that came along and he had to write that. And the reason that everybody is so cagey around it is because if people knew that Bitcoin was essentially invented by a 16-year-old kid, like, how would that change their view of Bitcoin? Are you really going to base the future economy? Are you really going to bet your retirement and all of these things on some crackpot idea that a teenager came up with? Right? Like, I thought it was funny because everybody in the Bitcoin, everywhere that I've read on Reddit, everywhere that I've read on the internet about this documentary, were kind of upset. Just like, well, you guys claimed that you were going to reveal who Satoshi was, but you have no proof. You have no proof. And so they were mad about that it was like overhyped. But I thought that the filmmaker was actually really, really good at understanding the implications of things and like where they were at. Like one of the things that he kind of subtly hints at in the show is that Bitcoin was a huge threat to the dollar as a transaction median. And essentially what happened was they made these changes and so forth. He put that thing in for the fee, and they kept it a small block and everything so that Bitcoin is not suitable for transactions like that. And then it wasn't as much of a threat to the dollar. And then after that, then it was like, oh, okay, Wall Street can come in and make it a legitimate thing so that people aren't being scammed by it anymore and everything. And then we can just forget about it. And at some point, some sort of a central bank digital currency will come along. And then nobody will want to, nobody will care about Bitcoin anymore. That's kind of like, that was kind of like what he didn't outright say that, but he kind of hinted that in like the overall narrative. And it was kind of a part of his thing that was like, it started out as like this cypherpunk thing that we're going to use this encryption technology to free ourselves from government control of money. And that as time went on, it kind of shifted and it just turned into, let's just make money from it, sort of a thing. And I found it super, super compelling. You can't replace the dollar with Bitcoin because it's like gold and it's a deflationary currency. So the economy, So the Bitcoin maximalists, the people over at Blockstream, because the documentary was really about the people at Blockstream there's one guy at Blockstream that won't talk to them, but the rest of them talk to them. And they keep talking about hyper-Bitcoinization, which is basically where all of the currencies of the world collapse and everybody just starts using Bitcoin. And in my opinion, it can't happen. If there was hyper-Bitcoinization, there would be a severe economic crash near after that would turn people off from ever using Bitcoin again. Okay, sorry, D. That whole thing, and you had a question that I didn't answer. As the book reloads at times, how does the resting calculate this? So it's really kind of looking at like when you add all of the levels together, what is the max that it was and what was the min that it was, right? So if nothing else was happening and there was somebody was just stacking and pulling a 300 lot, then that max would be 300 more and the min would be 300 less, and that's what it would be showing. Because basically it's trying to help you filter out all of these orders that are constantly stacking and pulling and stuff, so that you can kind of sort out what is the maximum amount of resting liquidity that can be available there, and what is the minimum amount that resting liquidity has been throughout that time period. And that kind of helps you filter out the tiny little noise. No, it would still be 300. It would still be 300. Yeah. This is like the maximum that it ever was at any given time. It's not like how much stacked or pulled. Now, if you want to look at like how much stacked or pulled, you can use the level 2 changes indicator, right? Because the level 2 changes indicator basically says every time that an order stacks, I add 1 to it. Every time that an order pulls, I add 1 to the pulling. And then you can filter it by, do I care about only stacking or only pulling, or do I care about only buys or only sells, etc., etc., etc. And so if you had it filtered down to say, only show me stacking and only show me bids, then if you stacked, a ton of times on the bid, then it would come in and I would say 3K.
Block buy.
I'm going to get out of that. Wish I was paying a little bit closer attention, but I was only like missed it by 2 ticks, and I might have already been too late. Like maybe that's the worst of it, and it goes back down. But I think that there was a headline there. Because we really, Fed's Goolsby, we've shifted now into a more normal balanced risk environment. So if Goolsby's speaking, I don't think, and he's very dovish, and the market is moving up on his dovishness, I don't think I want to be in that trade anymore. Did you see that? Yeah, I think I saw that. I saw something out of the corner of my eye that concerned me, and I just, okay, we're done. Yeah, you prefer the diff. I remember, because the diff one is kind of like, okay, is there more stacking or more pulling? Because if somebody is coming in and constantly just, going like this and then killing it and then killing it, right? Then that's a stack and that's a pull. That's a stack and that's a pull. And so the difference will just say 0. And it will only tell you something interesting when more is stacking than pulling or vice versa. Rush of selling and then rush of buying. Yeah. No, that was definitely the market reacting to Goolsby there, I think. They bought up, it sold back down really aggressively, and then bought back up again. Yeah. And I think the right call is probably higher. Although I don't know if you're going to get too much from Goolsby. Probably. So I'm just going to get out. I'm going to just get out. The market vol. You mean the market order imbalance? You're using the market order imbalance one, right? Because that one, that's one that, okay. I don't know if we know. I've told you about this before, but you probably forgot about it, okay? The way that the market order imbalance came about was I wanted to make a short-term scalping algorithm, and I basically said maybe I can look for these extreme imbalances brief imbalances in cumulative delta and predict turning points from that. And I found that those points actually do tend to have some significance. But I wasn't able to backtest it because, it was so granular at the time frame that I wanted that the tick replay wasn't accurate enough. So I kind of shelved it and said, let's collect data and then we'll come back and look at it later. And that's what we did. And then I had never come back to look at it yet. But that's one that I suspect I could turn into a scalping algorithm. And Uzi's been using it and he felt like he had some success with it, so. And Stuffa, how are you doing? Nice to see you this morning. Yeah, I will look into it. But you were thinking about something else, huh? The market volume. Anyways. Dude, today's action, very, very curious. Really does seem like that the market is calling a bluff. That they're like, oh, what you hear is Mr. Legit. I missed the part where you're explaining why the treasury sold off and popped back again. Okay, so let me explain. So I'm going to come over here to the chart. So the first thing that I think we have to point out is a little bit of context, okay? We were sitting just above a 200-day moving average, and the overall trend has been up. I mean, the overall trend over the year has been up. The market expects the Federal Reserve will cut interest rates. So I think that part of what happened when you come in here and then you look at the move itself, the initial move was a sell. And they went well through that 200-day moving average and almost immediately popped back up. Now, I started selling it through here. So I basically, what I did was I sold it here, and then I took some profits here and let it come back up and have kind of been sitting here. And then on that, I bailed, is what I did. But look at the treasury. Look at the 10-year treasury, the cumulative delta after the event. Buying. They actually bought it. Look at the spread. Steepening. So what does the steepening mean? The steepening means that the market expects the Federal Reserve to reduce interest rates in the future. And this is what gets you a steepening yield curve. Like when we're having an economic crisis and the Federal Reserve is doing things like emergency reducing rates, then you see the yield curve steepen super, super fast. And it's a crazy, crazy, crazy move, right? So part of this probably was people taking a counter trade on it passing through that 200-day moving average. Oh, it's below the 200-day moving average. We should buy it here. Simple as that. Mean reversion, like portfolio trade sort of a thing. Okay. But then there seems to be this other thing that's like, well, we know that the inflation was higher than anticipated, but that's not like a huge deal. Like spot 3 isn't the end of the world or anything like that. And we think that the Federal Reserve is still going to cut interest rates. So I think, the problem here is the market's not perfectly efficient. And we don't know what everybody was thinking, so we can only theorize. Right? How much of it was the counter trade here? How much of it was people trying to call the Federal Reserve's bluff? You're not going to do anything about it. Doesn't matter what as long as the CPI isn't like some insane number, you're going to cut rates. Kind of seems like what they're saying. And now you got Goolsby coming in and he's still speaking dovish, although Goolsby is like the most dovish guy on the Federal Reserve. I honestly kind of wonder, he was one of the guys that Biden put on the board, and I don't know, he's so dovish that I kind of wonder if he should, if he's really qualified for the job. Don't really know a whole lot about his other opinions and everything other than what he says when he's speaking, and when he's speaking he's just so obscenely dovish that it feels like he's a political appointee, that he's a political hack. Hey, there you go, Octavia says that he is a political hack. Yeah, I kind of feel like Goolsby is a political hack. Well, we'll see. Looks like that my trade that I got scared out of, that it would have been back to 03.5, that would have been better. I'm okay. I'm not going to worry too much about it unless, like, well, I'm not going to cry about it. I guess I could say I'm out. But, you know, if they came back below 112 even, then I would be really disappointed. Like, oh, I totally had it and I got scared out, and I shouldn't have let myself get scared out. But at the moment, I'm kind of thinking that they seem to have built a floor here at the open, and you got Goolsby speaking and everything. It's just not worth it to be in the trade anymore. Go work at a prop firm working on their software. This way you're doing two things you like. Yeah. Well, so kind of if there was a prop firm that was hiring and they were allowed remote work, then I would totally do it. But every kind of job that I've seen of that nature, it's like you have to be in Chicago. And I don't think that any of those guys are really looking all that seriously at people that they have to relocate. Because I've had a lot of recruiters trying to recruit me for like hedge fund roles in New York and Chicago, and they're super aggressive and everything. It's like I'm their first result that comes up, sort of a thing. But then I give them their resumes and I never hear anything. So I think that a major factor is that I would have to relocate. They're not interested in that. So yeah. They're already trying to figure out how to control their traders when they're losing, as they do some type of a pay to trade thing. Yeah, well, I have some skills that, you know, you give me access to the Rhythmic API that they have there on the back end to build their systems with, and I could build a system that would be better than what any of the other prop firms have. Like, one of the things that they have is that, like, they don't know if you've passed the combine or not, and things like you have to notify them and submit it and stuff like that. Why doesn't it just automatically do it, sort of a thing? Well, it's because they don't have a system that can actually process that efficiently enough. When I worked for the bank, we used KDB Plus, and we were calculating those sorts of things for every client 10 times a second. And I can do that. So I could make a really good system. Yeah. Maybe I should just start my own prop firm. But then it's kind of like, well, but what would I do if I was going to start my own prop firm? What would I do that would be different? I don't know. Because it kind of seems to me that the reason why those make money is because most people lose, right? So how would you, I don't know if there's anything I would change to make money. And the things that, like, I would like to see, like, maybe people go for more long run performance and everything, then you're not going to make money. What I think would probably make more sense is you fund your own account, and then we can see your performance. And if your performance is really good, maybe we fund you. But you know what? Like, isn't that exactly what Futures Trader 71 was doing with, EdgeClear now, but especially with the ones that they were doing before that. I'm like, I don't know if that one really was that worked out that amazingly, you know. So I do kind of think though, like, what is KDB plus? Okay, this is such a weird thing, dude. Okay, so KDB plus is an in-memory database is really what it is. So basically it allows you to define columns and rows, except for that most of the time when you're dealing with data, like let's say you're doing a relational database, right? A relational database, you'll pull things in and then you'll do your query and then you'll run through things row by row, right? You say, okay, here's this entry, here's this entry, here's this entry, and iterate through all of it, right? In KDB Plus, things are organized primarily by column. So you'll do your query. You have rows and columns and you can manipulate them and everything else like that. But what you get by default is the column. And normally what you do is you just say, here's this column, add everything together in this column. And the guy that wrote KDB is some sort of autistic genius that has discovered a method of iterating over a row in memory and summing all of the values together that is faster than anything else. So basically, if you need to sum a large number of values together or you know, do any kind of a calculation like that, like you're doing in risk management and so forth, you can do it faster in KDB than you could do if you were just writing your own C++ code. We don't know how he does it or what the trick is or anything. It's proprietary code, but there's something about it that's super, super fast. Okay. So all of that just sounds kind of like, oh, okay, it's an in-memory database. It's just kind of a different database, right? And in memory, that means that like it's running on that machine. You can get results from it very, very quickly, but you have to use a lot of memory to do it. Yes, these machines that were running these services had a lot of memory, so that they could use all of that RAM to do this fancy pants stuff, right? Okay. Where KDB gets weird is that they developed their own language for it. Is the language called KDB Plus? No, I think KDB Plus is the database. And what is the language? Q. Yes, they call the language Q. And the language that they built, so this whole thing was written by the kind of guy that thinks that everything should be written in C++, and if you can't write in C++, it's a skill issue, and I'm going to use Vi as my text editor, and I'm going to do everything from the command line, and that kind of like Linux purist type of person, right? Like I said, the guy that wrote it is some sort of like autistic savant or something, all right? So if I'm going to do everything from the command line, I need all of my commands to be really short. I don't want to have to type out this whole word. I just want it to be 2 letters. So every function in this language is literally like 2 letters. It's insane. It is an insanely terse language, which is to say that you can say a lot without a lot of characters. Another thing that's really weird about it is that there's lots of context. So like quote marks can mean like 12 different things depending on the context in which it's used in. And so basically KDB ends up being this incredibly, incredibly, incredibly powerful tool to use that is insanely hard to develop with. Like if you're going to develop in KDB, you have to develop with KDB. Like I was doing it for a while and I was doing okay, but I had to talk to the one expert guy that we had there that's all he did, right? To really get a whole lot done. you have to memorize everything. It's not a language like in C# or Java or whatever. You just start coding and you kind of learn things along the way and yada yada. No, it doesn't work. You have to memorize all of the function names. You have to memorize all of the syntax and all of the context and everything. It's a lot to memorize and remember and everything. And then even if you have all of that, going back and reading code and trying to understand what a piece of code is saying is incredibly difficult, because you can't just kind of scan over it and get a general idea of what's going on like you might C# code, right? No, you have to parse every little function and quote mark and all, tick and all of these sorts of things to understand what's going on. So KDB is a really wild thing to work with. Then on top of that, the way that the program is going to be structured in KDB is completely different as well, because then they get into all of these sorts of weird things where like you can use these database tables to like control the program flow and stuff like that. So it gets really, really wild. If I were to go back and after that just go full bore into I'm going to be a KDB developer, I think that I could probably live in New York and be making north of $300,000-$400,000 from doing that, just because there's so few people that do it. There's so few people that can actually like practically function with that. And by this point, I would be to that point where I could really program with it, right? But I didn't. I would have to move. I think it would be really hard for me to shift into KDB Plus now. How did we get into KDB Plus? Oh yeah, because I was saying if I worked for a prop firm, I would probably write it in KDB Plus, and I would be able to write a system that would be better than all of the other prop firms out there. Yeah, it'd be fun. If we want to implement a specific scalping strategy on the Jigsaw Manager, what's the Jigsaw Manager strategy? Are you talking about there's like a newer thing to manage your strategy through this window, I think it is? Strategy Manager? I don't there's not any real programming that you can do with Jigsaw right now. So if you want to implement a tick scalping strategy like that, your best bet is to probably use NinjaTrader in C#. Your best bet is probably use NinjaTrader in C#. Or convince Peter to give you the code. You need to convince Peter to give us the code. I was thinking about like sending him an email about that and everything, but then I was kind of like, nah, I'm not going to mess with that. Maybe it was because they released the beta. By the way, can I tell you, I've kind of been thinking about this because when they put the beta out, and the first beta had some problems, and I think it kind of turned a lot of people off. But the thing that you got to realize is that there is a natural tension between an application progressing and adding new features and an application being stable. Okay? The more features that you're going to add into something, the less stable generally it's going to be. So these applications, Jigsaw and Sierra Charts in particular, that are both adding lots of features all the time, although I don't know if Sierra Charts has added anything too new recently. So maybe they've just kind of been around long enough to add all of the features. But like Jigsaw is constantly trying to push and to add new things and everything. To be really pushing the features forward and still having an extremely stable application is a really unusual combination. So something that I think would be very difficult to do. So, them putting a beta out and the beta having a lot of problems, that should probably be expected, and really I think a good sign for like them as developers overall, that like they're willing to take risks in a way that isn't going to harm our trading, to push the application forward. So I kind of once I kind of started to think about the risk management of it and everything, I was kind of impressed. I do kind of think, though, I could add all of these spreads and that sort of stuff into Jigsaw, and I could probably do it in a month and release it, and it would be a large benefit to us trading treasuries with Jigsaw. But nothing has changed since, well, first of all, it hasn't been 15 years, right? So Jigsaw Day Trader, the platform itself, has only been around for 6 years. And then they have had 3 major iterations of it where they added features. Now, one could argue I don't use those features. I personally don't use most of those new features that they add in, but they do continue to add new and interesting features. Much more so than, in my opinion, the other platforms. Jigsaw is another one that they add new stuff pretty frequently, but the new stuff that they are adding are usually things that are like to expand Jigsaw beyond just futures, so they kind of don't really matter to us. That's how I've been able to continue using the older version of Jigsaw without the cloud authentication built into it for so long, because they just haven't changed something significant enough for it to be worth me upgrading. Now we got Barkin speaking. See risk that higher rates could boost housing demand. Is he going to turn hawkish on us now? Well, I do know. We're still not quite to where it's like I wish that I had been able to hold that trade all session. But if I had held it, if I had not been scared out by Goolsby, I'd be okay. Actually, it would be the furthest that it's gone, because it's been a little bit further before it got to like 04 and turned around. But I'm still like 112 even kind of seems to be like the near breaking point, where it's like if it goes below that, then maybe it really could have been worth my while to have held it. I guess if I really am going to sit here like I'm not going to be able to find a job for 3 months and everything. One of my issues has been that it hasn't been like complete, just I have all the time to work on the stream like I would like. Most days, at least 3 days a week, 2 or 3 days a week, I've been watching the kids all day, and then I'm not able to do anything that day, right? My mom's going to be here, so I guess I have some time to work. And then I have to submit resumes. But if I was like really going to get super deep into something, maybe it would be making a platform. Although I kind of question the platform thing a little bit, to be honest with you, because which kind of reminds me, I haven't touched that in a while. Why haven't I not touched that in a while, Brad? Why? Did I just forget about it? So Brad wrote something in Rust, and there was kind of a problem with it, but then I think that they fixed it, and he fixed it, and like it works now. And I just hadn't messed with it recently. But one of the things was when I was going through all of that, and I was looking at the frameworks in Rust and things like that, it left a lot of question in my mind as to whether Rust was truly a suitable platform for making a trading GUI in. I think that there's a lot of things about it that would make it good for trading applications and everything, but the biggest problem is that it is a GUI application, and there's not like an agreed upon standard for building GUIs in Rust. And everything that I've read about it is kind of like that. It's a very frustrating to do. And, you know, like Jigsaw, they're doing it in C#, and there's some big advantages to making GUIs in C#. Or maybe you do it in C++, but then how are you different from Sierra charts? Other than that I want to make the programming part be in Python. Okay, well. But honestly, though, guys, and this isn't me like burning out on trading or anything like that. Like, I still love trading, and I'm always going to love doing this, and I'm always going to want to do this stream. I hope that things never change, that somehow we're not able to do the stream anymore. You know, being here and doing this is just, I want to diversify, you know. I want to have another let's go get it business venture sort of a thing that's not trading. That's more, that caters more to average people and isn't dependent on this sort of like, to be successful at it, you really have to get like super lucky or just be absolutely amazing sort of a thing, right? Just something that I can like all out pimp, you know, and promote. And I'm just not sure what it could be for me. I saw Peter's video on YouTube, and little things have changed since the first video he posted. They changed the preset, yeah. Peter is the person who makes Jigsaw Day Trader, the software that I use for the DOM. So their most recent version, which is going to be Jigsaw 3, they've like changed the skin. So like I don't like it, but now up here at the top, instead of it being this blue grayish color, like the background is just straight black, and it's like a black skin, which is way too contrasty, but like it looks significantly different. The columns and everything are still the same, but yeah. So that's like one of the things that they changed. But I'll give you a couple of examples of some things. So one thing that they added that I don't use, and this one has been around since, I want to say 2018. I want to say 2018 is these gauges. I don't know what we call them, but this is kind of supposed to give you some idea of what the pace of the tape is. So that's one feature that they added. When you come in here into the DOM, there's a lot of little settings. One of the things is that they added some columns, like delta price is a relatively new thing. LTQ is something that I think that they've added since the pandemic. Highlight bid offer on price. That's something that they've kind of added. A really big one that do I have it turned on ES? Sometimes I forget to turn it on, but it's a feature that I find really useful, is the momentum tails. Yeah, I do have it on. So when there's a big move, it kind of like the color on the current trades column kind of like slowly fades so that you can kind of see that there was like a big fast move there recently. So momentum tails is super, super useful. They added in this real-time news bit right here. Okay. And then more recently, since the pandemic, the big thing that they've added is the charts. And I mean, I don't use the charts because I use NinjaTrader charts. But, you know, like there's a lot there in the charts. You can't like program it and everything, but there's a bunch of different chart types. They have these footprint charts that are quite sophisticated. Some of these, I don't know what a reversal FP is. That's kind of interesting. Okay. And then after all of the chart types, you've got all of the indicators, and they have a ton of indicators too, right? So that's a lot of stuff that they've added. So these guys actually add a lot of features to the program. Like, again, to add as many features as they do and still have a very stable application is incredibly impressive, because those two things are really conflict with each other. They're difficult to do at the same time. Typically, when you're a new application, typically what you want to do is to say, we're willing to risk some availability in order to get new features out. Because if you don't have cool enough features, nobody's interested in the application. It could be like the most stable thing in the world. It would be too boring. How much RAM do I have? I have 32 gigs. I'll pull that up. Over here, application, memory. In use, 24 gigabytes available, 6.4. Wow, I use a lot of memory. You know what? It's probably Brave. Yeah, Brave is using 8K. That's so ridiculous. That's so ridiculous. Someday I would like to have 64 gigabytes of RAM, honestly, though. But I don't really need that right now. It hasn't come up, so I never went out and bought it. Well, they continue to just slowly trail down here. Maybe we do get to the 112 before I have to go. And what chip and GPU? Well, I don't remember anymore, to be honest with you. It's funny because I bought that like the beginning of last year. Processes. Oh, not processes. CPU. There we go. Ryzen 5 7600. And then for the GPU, I have a GeForce RTX 3060. Honestly, I don't really make much use of the video card. For a while there, I was playing Minecraft and everything, but I haven't pulled that out in a while. That was the only thing that really made use of the GPU. The CPU and everything, though, made a big difference to the stream. And the reason to go to the video card was to be able to use the video encoding. It made big differences to the stream. The stream is a lot better now. Those sorts of things. You have 64 gigabytes and Ryzen 9. When I was doing it, I kind of thought about a Ryzen 9, but I was kind of like, you know what? Probably next generation of CPUs will come out. I'll be able to upgrade still, and but it just kind of came down to, I don't know if I'd actually use it. I had a really old machine before, and it was good for the most part. And the only place where it was maybe an issue was when I'm running the stream and I wanted to add like more DOMs and stuff like that. And then there was maybe to a point where I was using up too much CPU. But as it's been now, it was like, I just kind of went for the best bang for your buck performance. And it's been really good, and I never think about the performance of my PC because it performs better than I need, essentially. So. And, the other thing, I think one of the big reasons why I wanted to do all of that was to make my rack and have two PCs in the rack. And I have the other thing running as a server, and I run a Kubernetes cluster on there and some robots and stuff on the cluster. Part of, one of the things here on the list, coming back to here, my to-do list, back testing cached data. Well, okay, so first there's three things. reconstructing data in Python, or in Python. So I have my indicators, and I have something that kind of like that it gives you the caching better. So I need to convert them all to that new cached version. That would then mean that all of these indicators cache. Some of them, like only some of them do right now, but like the market order imbalance, that one doesn't necessarily cache, I don't think. And we want it to. And then we save all of that data, right? So once, and then making it so that the indicator that is pulling up the cache data and whatnot, that it is backtestable. I had some problems with it. I don't know, and I haven't really had the time to really dive into it, but being able to do the backtests on that cache data is a really big deal, because then once we're there, then we can actually do like real order flow backtests again, and we can do them quick because that's already calculated, right? Big deal. Then we want to go into the machine learning route. And because we record basically every message that we're sent and put it into a file, I can do stuff off of that. So then that's where, actually, let's not call it reconstructing indicators in Python. Let's call it data engineering pipeline. So then what I need to do is have some automated processes that at the end of our session, it will take that data, it will upload it to the server, and then I can have an Airflow running in there. Airflow is kind of like a way of saying, this is dependent on this, is dependent on this. So after this thing is done, then you can start this thing. And then I just kind of have this pipeline that takes that data, and one thing will convert it into like the different indicators or features that we want to watch. So like reconstructing cumulative delta, reconstructing market order imbalance, reconstructing the level 2 resting orders kinds of indicators that we have, doing that in Python, and creating data series out of those in Python. And then another step would be, combining it all together into features and passing it into a machine learning system. And then another one would be like training the machine learning system or updating its training on that data and seeing what kind of results that system can pull out, right? So that's the big project. So maybe, I'm kind of ahead on videos now at this point, I think, because I got like 3 scripts that are like almost finished. I'd like to have at least one of them like totally completely finished, ready to record before I like get too deep into programming stuff. And there's some book reading that I want to do as well before I get too deep into programming stuff. But then there's another part of me that says, but maybe we should pick up a programming project that's not day trading. Maybe we should pick up a programming project that's not day trading that can make some money to diversify. So if you have ideas, like seriously, let me know. Would really like to know your thoughts and ideas. Okay, well, I'm a little bit early, but I don't feel like I have anything else to say. I feel tired, actually. This was a bit of a roller coaster of a session, and I'm probably tired because, man, just thinking about trying to get a job is really stressful, man. So, yeah, it's best to get to it. So I'm going to some overnight strategy, but is it on trading? What do you mean by that? Well, the thing that I want to make with the data engineering pipeline would probably only trade during the most active hours of the trading session. Basically, a machine learning algorithm that utilizes what we know about order flow to see what we can get. Could be significant. I don't know. We'll see. Anyways, guys, I should get going. I will see you tomorrow. Hopefully, we got Uzi back and everybody in Florida is okay. Oh, wait. I'll stick around for a second. You guys got questions here. Have you tried Jigsaw's advanced order flow training pack? I have not. But here's what I have been told. So first of all, the training that you get with the base version of Jigsaw is great. Okay, you are going to learn a lot from that. Okay, you do that, and then you watch the free videos that I have here on the channel about order flow, and I think that you will be ahead of pretty much all other retail traders as it pertains to understanding order flow. And then from there, it's just building the intuition and watching it every day. Okay. I've heard good things about the other two more advanced ones. There is an advanced training pack and an institutional training pack. And what I have been told about the institutional training pack is that that one is really for, like, if it's an institution and they really want to spend top dollar, that they can do it. But that for retail traders, that it's really not worth it. And that you get everything that you need to know from the two lower level ones. Okay. So I should point out at this point, because, you know, I do have my bias. I am a Jigsaw affiliate. There's an affiliate link in the video description. When you buy Jigsaw with my affiliate link, I get a pretty decent commission. And the more of those that we can get right now, the better, because I'm kind of poor between jobs. So I appreciate it. Those actually have been getting a lot of affiliate sales lately too. So I really, really appreciate it, guys. But the vast majority of those affiliate sales are for just the base version of Jigsaw. And you can always just buy the base version and upgrade later. And that's probably what I would recommend. Okay. So like really, there's only been a handful of people that have bought the more advanced versions. So I would just go for the base version. Just found your channel trying to finish. Oh, well, thank you very much. Yeah, well, you know, the main thing that I would watch is the order flow series. If you go to the channel, there's a playlist and there's an order flow playlist. And that's the stuff that is like the most pertinent to retail traders. Because a lot of the other stuff before that, it was a little bit more general trading advice and trying to help people understand that, like, the markets are competitive. You have to develop your own edge. Order flow is where I really started to get into empirical data and studies and teaching you really deep stuff that you don't see anywhere else. And I think is really, really valuable stuff. So that's where I would start. And then the other videos would just be videos that's like, if you're interested, if that's a problem that you're having, or that's something that you're interested in learning more about. So, and I got a ton of videos coming here, hopefully. So, guys, I will see you. Now I'm really done. I'll see you tomorrow. Stay excellent, team.